Welcome to Markets Now. I'm Michelle Rook with Chip Nellinger, Blue Reef Agri-Marketing. Lots of red on the board on Friday with the exception of the wheat market. But let's, Chip, talk about corn and soybeans. New contract lows in both of those markets. Part of it was the rains that we saw this week, and there's more in the forecast, right? So ideas that this yield is being made now.
Yeah, they really were, especially for some of these fields in the Eastern Corn Belt. Pretty widespread rains across Illinois, southern Wisconsin, Indiana. I know parts of the Western Corn Belt, west of the Mississippi, had some good rain as well, and couldn't have come at a better time for our crops with the development stage that they're in. Essentially, it's going to finish us off. We're going to be good to get to the finish line with these crops, and I think that at the end of the day was really what pressured the markets there at the end of last week, and that's something that was a struggle. Now, are they going to confirm 183 bushel national average yield and near 53 on beans? I'm not sure, but those rains really were something that finished a lot of crops out there late last week.
Yeah, so was some of the pressure on Friday or today as well, just anticipation of what we're going to see out there for those yields in the crop tour?
Yeah, I think there's one train of thought that Pro Farmer is going to find and confirm these massive yields out there. Typically Pro Farmer comes in just a touch under where the August yields were from a USDA perspective. But I think the question is, are they going to pick up? We know there's problems out there. We know that there's some pollination issues in areas. We know that there's tar spot out there. We know that there's some insect pressure. We know there's been more hail and wind than a normal year, especially in the Eastern Corn Belt. But are those problems widespread enough to drag us off of that 183 national average yield or not? I'm not sure whether we'll find any more answers, but I think that there's certainly a train of thought that they are going to confirm these massive yields, and especially after the recent rainfall. And that's something I think that kind of kept some pressure on the markets there as well.
I would agree with that. And when we look at some of USDA's yield projections, especially 225 record yield in Illinois on corn, is that achievable? And what are you going to be looking for in the report to kind of confirm that that yield is out there?
Yeah, I think it is achievable. That's a tall order, right? I mean, that's a big number above what our previous record high was in the state of Illinois. So pretty lofty goal. What do you need to see? Well, you need the population and the ear counts to be there and the grain fill. And I think that Pro Farmer will have a really good snapshot of that. They go through some of the best areas, and so if they're consistent across all their routes across central and northern Illinois, I think you have to assume that maybe that 225 is out there. But if they get in there and see these little problems like we talked about, tar spot here and there, pollination issues, population issues, insects, if that's going to drag us off, I think that they cover enough real estate in Illinois that you're really going to get a good snapshot of whether that 225 is achievable or not.
It's a little harder to tell on soybeans with the pod counts, but obviously USDA has states like, we'll go back to Illinois again, 66 bushel per acre. That's a record yield. It's going to be hard to tell that, though, even once we get these pod counts, isn't it?
It is. Beans are always tougher to tell until you get the combine rolling through. I can just tell you, just in my own small limited travels, the last week or so in Illinois, particularly northern Illinois, north of Peoria, there is a lot of sudden death popping up. And I'm not talking little pockets. I'm talking it's across fields, it's big areas. I don't know whether that's widespread enough. And again, I don't know if Pro Farmer will encounter that enough to tell. But certainly the bean fields here locally where I'm at, where our office is, looks a lot different than it did 2 and 3 weeks ago. And this sudden death is popping up. And I think it, at least in this area, could become a problem on some of these yields. Is it late enough that it still can yield and we can see that 66 bushel Illinois state yield? I'm not sure, but there's some questions out there in my mind.
Yeah, and then how does the tour treat some of these areas where there's no crop, like in South Dakota, parts of Iowa, southern Minnesota, and does that show up?
Yeah, and that's always, I don't think that's part of obviously their process to calculate that. But I think they do note that as they come across, hey, here's a large pocket in a certain area that had no fields planted or got flooded out, after the crop was planted. I don't know that you're going to get a real good feel for whether that's a big enough impact, to affect it. But certainly with today's, day and age of social media and most of those tour participants, at least, tweeting out or putting some social media posts out there on there should be enough information to kind of figure out, hey, this could be a problem. But I don't think that at the end of the day, Pro Farmer has that in their process. More so, it's what is the actual routes and yield projections that we do, but acreage and flooded out crops and failed crops aren't part of that process, I don't think.
Yeah, I know. And we're always hoping that the bad areas will offset the good areas, and that's yet to be seen. I got to ask you from a technical standpoint, like we said, down at contract lows here. November beans, I think, 950 is kind of the next area that we need to hold. Do you think we will? And what are you watching on corn?
Yeah, I think obviously the technicals way oversold, especially on beans. Continue to become oversold, right? And I think 950 is an area. If that gives way, I think that there's much more support in the 920 area. That'd be another 35 cents under where we're at. Corn was trying to hold, couldn't get the job done. If we can bounce back, you have people saying maybe it's a double bottom type of a thing. I think the key, and I say this with bated breath, the key may be the wheat market. And Chicago wheat, we had Kansas City pushing a new contract lows. Chicago held those contract lows. You continue to keep the funds short in the wheat market, kind of chopping sideways here. If we can kind of rally last half of August and first part of September, I think you could see some short covering in the wheat market, and that could spill over and maybe drive some short covering in corn. So I hate to say it, wheat's such a disappointing market to trade, whether you're a bull or a bear. It doesn't follow through either way. But I think the case of corn, especially, the technical picture in wheat to me looks like we could still be in the process of putting a bottom in. Seasonals would tell you that we can rally wheat into September and the first half of October. And if you can, that could spill over and maybe cause a little bit of short covering and at least a temporary bottom in the corn market. I don't know if it's the bottom, but it's a temporary bottom, and corn and beans pretty oversold. It wouldn't take much to get a correction or needing a correction to correct some of those oversold territory levels.
Do you think the pop in the wheat market, though, on Friday was just short covering? And is it going to be short lived? Because we get those one-day pops, but no follow through.
Yeah, that's the case both higher and lower. I think it remains to be seen. We're still kind of going in this sideways range. Do we fail and push into new contract lows? And I think that'd kind of be the kiss of death in the wheat market. You continue to hear all these stories almost on a every other day basis. It seems like some new private or governmental organization comes out of Europe, whether it's Germany, whether it's France, even the Ukraine wheat crop continues to be downgraded. And so those numbers are ending up way, not a small percentage, but way below where the USDA estimates are for those crops. And so I keep thinking that maybe eventually these smaller crops and the problems you're seeing across Europe, across Russia, across Ukraine, eventually will spill over and give us a bottom in the wheat market. But so far, to your point, it hasn't. We haven't been able to follow through to the upside on any small temporary rally that we've seen.
Yeah, I agree. The market hasn't priced in these global issues, but don't you have to have, even if there's global problems, some of the demand come over to the U.S. for it to really matter?
Yes, we will have to start seeing that. Wheat demand has been better than it has been over the last year or so, but we haven't seen, that full-fledged shift to demand and bigger numbers and, aggressive demand. Now, there are some signs. I think world freight rates are improving. I think that, as they get into that harvest and deeper into the harvest in Europe, that there is the confirmation that those crops really are as poor as expected, maybe more so. And so it may just be a process to get there, but we haven't seen it yet. We've seen kind of small indications of it, but not that full-fledged buying spree of the world coming to the U.S. market for wheat yet.
And kind of a tough down day in the cattle market on Friday. So we know the funds have been liquidating, but we did have lower cash. So that also contributed, didn't it?
It definitely did. It definitely did. The thing about the cattle market, it seems like that is the one market that responded there a week and a half, 2 weeks ago when we saw all that financial market, stock market volatility. It just seems like the fund said, "Hey, I've got all this other outside market influence. I'm going to reduce my position in the cattle market no matter what." And they continue to do that, it appears. Now, the lower cash trade certainly didn't help that at all. But to me, I think the more concerning trend has been that it looks like the funds are just starting to reduce that long position in cattle. I thought the same thing would happen in the grain markets. We didn't really see that in the grains as far as the funds getting out of their shorts, but it does seem like some of this outside market volatility has just caused them to, slowly but surely liquidate this long position they've had for a couple years in the cattle market.
Yeah, and it feels like the lower cattle market's dragging hogs kind of down, or at least capping a rally there.
Yeah, for sure. I think that goes back to the fundamentals. Even though we've seen some sow liquidation, the pigs per litter has just continued to explode. We're putting more weight on them, and that's kind of offset some of the liquidation. And unfortunately, the hog market just continues to struggle. Third and fourth quarter is never very good for the hog market anyway.
Thanks for joining us, Chip Nellinger, Blue Reef Agri-Marketing. That is Markets Now.